Logistics company Stobart Group has, like a lot of businesses in the sector, found it going tough over the last 4 to 5 months or so. But under its chief executive, Warwick Brady, it's coming out of the pandemic downturn fighting. In June, the company announced what the CEO said then was a clear plan to stabilise the business and provide a clear platform going forward. Warwick Brady joins us now on the line. Warwick, it's good to talk to you. Thanks indeed for your time. I know you're a very busy man putting together this new strategy. Just outline the changes that this announcement has brought for Stobart Group.
So, thanks, Jeremy. Good to be on today. The strategy we've outlined is very clear. We want to be focused clearly on aviation, specifically the airports business and aviation services, but also our renewable energy business, both very valuable businesses that obviously suffered significantly during COVID. So we've then decided, obviously, to divest of everything else, including the rail and civils business, which you will have noted we sold last week for £1,000. And we've also got some non-strategic infrastructure that we're also divesting of. So very clear focus, aviation focused, a renewable energy business, which again, we've been very clear that we want to monetize over 18 to 24 months, which then further create more funds for investment into the aviation business.
The question has to be then, why aviation and energy? Why have you stuck to that particular part of the business and divesting the rest? What is it about those two items you see a future in for shareholders?
So there's two sides. The renewable energy business is clearly a very high growth business. Our biomass business is high barriers to entry. It's a sort of 30% margin business, post COVID. It's a long-term contract business. So it's a very valuable business in a sector that's growing. It's a circular economy and obviously got quite a low carbon footprint. So we believe the renewable energy business is going to be very valuable in the next sort of 18 to 24 months. On the aviation side, so when you look at a pandemic, of course, it's had a massive negative effect on the whole aviation industry. But if you take the last 50 years, aviation's been growing at sort of 1.5, 2 times GDP. It's been growing in London at sort of 3 or 4 times GDP growth. That's London GDP. So the travel market, even in 2019, had some severe capacity constraints in London. I believe that at some point, over the next 2 or 3 years, we'll see the back of a pandemic and we'll see return to growth and we'll get sort of capacity levels back to 2019. Airports are highly valuable assets. They are long-term assets. They're sort of valued at 20 or 30 times multiple. You saw London City being sold. You saw obviously London Gatwick being sold. So there's hardly any airports being sold below a sort of 20 multiple. So a very valuable asset for shareholders. And on the renewable energy business, it's a sort of multiple of 10 to 12. So what we're saying is, as you're going forward, every pound we spend, if you get a sort of 20 or 30 multiple versus a 10, then clearly you're going to end up putting capital into your aviation business. Of course, cut all that back, which is why obviously we did the capital raise to kind of protect our liquidity and to protect the shareholders' investment.
In the meantime, of course, that we're waiting for the bottom, especially in the aviation part of the business, obviously. And as you say, maybe it might take a year or two to come out of that. How do you see the business developing? How will you want to develop the business? Are you going to grow organically, or do you see yourself wanting to grow by acquisition at some point in the future and take on the services and logistics businesses that you do at other airports other than those that you currently have?
So I think our first focus is on obviously organic growth. Certainly on the airport side, we want to make sure we monetize and create as much value as possible from our airports business. We've also got an aviation services business, and we're in 5 key airports in the UK, and that will be growing. Of course, we're not going to rule out a potential buy and build strategy. But the first thing is we want to obviously make sure we have a very secure balance sheet. We've obviously raised quite a lot of liquidity, so we have sort of a 2 or 3 year run rate where if things are not as good as we expect or they're slower, then we've obviously got liquidity to manage that. So our strategy, again, going back to the renewable energy, grow the renewable energy business, continue to get that into a really good high cash generative business, monetize that in 18 to 24 months, will then obviously generate even more investment required for even further growth on the aviation side. And remember, sort of London capacity in 2019 was kind of was effectively completely jam-packed. with obviously slot constraints, etc. And IATA are forecasting the traffic levels to be back there in sort of 2023 time. So, this is a big setback, obviously, for aviation, it's a massive setback for airlines. But, people are always going to travel. I think you're going to see, we're focused on leisure. We're focused on point-to-point Europe. I think the first returners are going to be that. And what we've seen at our airport, we've seen Wizz, EasyJet, Ryanair restart, and the planes are booked full, and we've seen great load factors, which is the amount of people on the plane.
Yeah, some of the businesses you have shared over the last year or so, of course, there's the iconic Eddie Stobart part of the business, which I believe has now gone completely. The rail business is now gone. I want to focus on the rail business particularly because it's interesting talking to investors within the Stobart Group, and they see this deal that you've done whereby you've got £1,000 for the rail business, but all of a sudden you've then potentially got something around 2.9 million that might occur as a result of this deal, given some sort of positive outcome of a deal. Can you explain what is happening here and what the likelihood is of you managing to get that 2.9 million?
Sure. So basically, the rail and civils business we've cleaned up, and it's, we've got some really profitable contracts there. We've got a big legacy project back from sort of before 2017 that started. Where we've obviously done way above the actual quote, and so there's a kind of dispute over how much work we've done and how much money we're due versus how much they're willing to pay us, which kind of then lends to this 2.9 million. Unfortunately, the rail and civils business was put back on, post Brexit. The government obviously held back on all the works on the rail, onto the rail, the national rail infrastructure, and of course COVID has obviously hit that hard. So that business has been loss making. We've turned it around, we've sold it obviously for £1,000 because it obviously was loss making, but the kind of upside there is simply because there's a dispute over the project that the team were doing, and that will come, that the arbitration will effectively decide how much that will be due, which will then end up being us potentially up to 2.9 million.
When do you think this could be resolved? I'm not asking you to pin yourself down on a particular date necessarily, but are we talking this year or next year? Is it a really long tail thing that we'll end up finding out about?
No, so the plan is we hope to have that resolved, as soon as possible. It's a matter of months rather than years. The buyer has also incentivized together with us to resolve that because we've actually split the upside on that together.
Right. I wanted to follow up, if I can, on the point you mentioned about Brexit. How is Brexit going to change things for you? And how much was this decision to go down this strategy route, bearing in mind Brexit? Was Brexit anything to do with your announcement in June?
So no, so Brexit hasn't, we're a very UK focused business. We've got our renewable energy business is a UK business. Our airport obviously potentially could be affected by Brexit in terms of the bilateral route rights between the EU and the UK. But in terms of that's protected for quite a long time until even post-Brexit. So, and again, I don't envisage really people stop traveling to Spain, Portugal, Italy, France. I just can't envisage that happening. So with Brexit's not been a major impact. I think the impact on Brexit really was for our rail and civils businesses. The government didn't really hasn't put any effort into investing into the rail infrastructure. Right, they've made lots of plans. They say they're going to invest in HS2. On the back of all those plans, the rail and civils business should be a very highly profitable business, but that work hasn't yet come through. And then, of course, COVID then obviously stopped some. It prevented the jobs to come through, but also the jobs were taking longer and be slightly higher costs. So that was the kind of impact of Brexit. Then obviously exacerbated by COVID.
How has the coronavirus or COVID-19 affected your business? We hear a lot about businesses being supported by the government. Have you had to rely on government support? Have you been furloughing staff? Have you had many people working from home? What arrangements have you had to make?
So, if you kind of go back to our core businesses, we've got two core businesses, which is the aviation business, which is effectively the airports business, which is passengers going through the airports, and our aviation services business, which is handling of aircraft around the UK. And then, of course, the renewable energy business, which is effectively taking recycled wood chipping it and then these long-term contracts into plants. Now, there's two things. One is obviously all the passengers, the top line revenue literally fell away completely on the aviation side simply because all the passengers stopped. We've got a global logistics business at the airport, which has been obviously going very strongly, but that's quite a small part of our business. And then on the energy side, we've obviously, we rely on recycled wood, which is all connected to the building sector. Of course, they stopped building houses. They stopped, although the construction sector wasn't completely shut down, there was a massive slowdown. They then obviously closed all the recycling centres, which again prevented wood from coming through the system. So we, again, massive revenue reduction on that business. So, revenue literally came off. Of course, what we've done, we've taken advantage of all the government schemes. We furloughed nearly 1,000 people over the last sort of 10 to 12 weeks. On the energy business, that's also restarting, and people are coming off furlough. And I think we're quite confident on that business. And then on the aviation side, there's just more uncertainty. We are potentially going to make some redundancies, but of course we've been using the furlough scheme actively.
Yeah, have you had many people working from home? Has that been a success? Talking to other chief executives, some are now rethinking their need for office space because they realise that staff actually are equally as productive at home as they would be in the office. Has COVID taught you anything in terms of an organiser of a business?
So no, I think what's been absolutely, again, very insightful, it created a landmark change in the business is it does show you can work remotely and be very productive. So we did a capital raise with our UBS, Canaccord, a whole bunch of banks, advisors, lawyers, and also our team, and we never met. Right, so to run that project, we were meeting every day on Teams, etc. So it does show you can bring together and have a very clear plan, bring a team together remotely and work very productively. So I think there's definitely a complete rethink in our business about how many people can work remotely, what productivity do you need. I personally believe there is a need for face-to-face meetings. You really need to meet people, your partners in business obviously want to know the people, want to get to know, who they're dealing with and what sort of business they're dealing with. But I think there is definitely a change. I think clearly there will be less requirement for office space. But it's been, there are two sides. I think there's been great. It's increased the communication, interesting enough, between all of our businesses. But at the same time, we're starting to see people return to work, and I think people are enjoying coming back to work, at least partially anyway.
Yeah, I just want to follow up, if I can, with one final question around the share price, because I know that as a shareholder, you feel the pain of individual investors. I also know that your executive chairman has shares in the business as well. So let me just quickly bring up a share price chart. Talk about what's been happening over the last 3 or 4 years or so with this hefty drop. And as I said, I know you feel the pain too, but just explain what's been going on, can you, to shareholders? And if you can, give them some encouragement, if you can, to explain perhaps maybe where you see the roadmap going in terms of shareholder returns.
Sure. So listen, I'm obviously quite a large shareholder myself. So we are absolutely committed to making sure we give the shareholders a return, and we're very optimistic about the value of our two businesses. I think what you see on this chart over the last 3 or 4 years is that this business returned a lot of money to shareholders through a regular income dividend based on B2B trading, so selling infrastructure, etc. We were giving about 60 or so million back to shareholders each year as a dividend. That was obviously put in place just before I became chief executive. It was clear that you cannot, that's not a sustainable cash generating dividend. So we did it. So there's two things we did. We obviously ensured that we've got two growth businesses. So the airport and the aviation business has been growing at about 40% per annum over the last 3 years. And our renewable energy business has been growing at sort of well above 10% per year, 10 to 20% per year, top line, and also the bottom line's grown much, much more. So, and the idea was, look, we had to then obviously reduce the dividend because clearly we were paying dividend based on infrastructure sales rather than cash generation. And the idea was to effectively focus on two businesses that over time would be very cash generative and very valuable to shareholders. So we obviously reduced the dividend to zero whilst we invested in the future. I think what we've seen very recently is, we issued a an open offer and placing at 40p, and obviously it's quite disappointing to see the share price around circa 30p for everybody. So what I can say is I think there's been some uncertainty around EasyJet at our airport, and I think that's obviously been a contributory factor about whether they're staying or going. Having said that, we've got an airport that even on alternative use is 400 acres, even at £1 million for planning an acre is sort of 400 million pounds. We've got an energy business that was sort of valued at sort of between 200 and 250 million pounds. So, we've got a business that's significantly worth much more, even standalone businesses when put together. So we are going to work very hard to make sure, we continue to grow, obviously, the aviation business, and we continue to ensure we monetize the energy business.
Well, look, I hope we get an opportunity to speak face to face sometime in the not too distant future, and we can perhaps maybe look at some better times ahead. But in the meantime, look, thanks indeed for joining us. That's Warwick Brady. He's the Chief Executive of Stobart Group. Just to quickly update you, as of the time of this interview, the current market capitalization of Stobart Group is 184 million sterling. So you can see in the context of what Mr. Brady was talking about there and the value of the parts of the business. That's our look at today's CEO interview.